Good evening, folks, and welcome to the Rahul Nair Finance Show. You're listening to the Daily Deal Room, from startups to stock markets, where we decode the business buzz of the day, crisp, clear, and to the point.
Just a reminder, this explainer is for educational purposes only, and it's not a buy or sell recommendation. You should always consult with a financial advisor before making any investment decisions. Okay, let's dive into this. We've got a packed agenda today. We'll start with the market's pulse, then break down the huge GST 2.0 announcement. After that, we'll hit some major corporate headlines, take a deep dive into the urban company IPO, and finish up with the latest from the startup world. All right, first up, let's get a feel for the market. Section 1, the market and macro pulse. How did the economic engine run today? So, at first glance, it was a bit of a mixed bag. The main indices, the Nifty and the Sensex, eked out some small gains, and a lot of that was thanks to the big tax news we're going to talk about in a minute. But look at the broader market. Both the mid-cap and small-cap indices ended in the red. It's kind of like a tale of two markets. The big fish stayed afloat, but it looks like there was some profit-taking happening elsewhere. But here's where things get really interesting. The headline numbers don't tell the whole story. The actual economic engine seems to be firing on all cylinders. India's services PMI, which is a key measure of the services industry's health, hit its fastest pace of expansion since 2010. That is a huge sign of strength. Plus, government borrowing costs are coming down. So you've got this really nice sweet spot of strong growth and easing financial conditions. And that brings us to our second section, and what is easily the biggest news of the day. Let's talk about GST 2.0. This is a potential game changer that's going to affect pretty much every single person in the country. The government is calling this a Diwali gift, and you can see why. The whole idea is to stimulate the economy by putting more money back into people's pockets and cutting costs for small businesses, right before the biggest festival and shopping season of the year. The timing is absolutely intentional. So what's actually changing? Well, remember how confusing the old GST system was? All those different rates, 5%, 12%, 18%. It was a headache. Well, they're basically throwing that out. The new system is much simpler. Just two main tiers, a 5% rate for essentials and a standard 18% for most other things. They're keeping a 40% slab, but that's just for luxury items and sin goods. The goal here is just pure simplification. Okay, this is the part you've probably been waiting for. What does this mean for your monthly budget? Take a look. Everyday items are about to get a whole lot cheaper. Things like soap, toothpaste, and shampoo are dropping from an 18% tax rate all the way down to 5%. Same goes for kitchen staples like butter and cheese. These are real direct savings that every single household is going to feel. And the impact goes way beyond your grocery bill. In healthcare, this is massive. GST on individual health and life insurance premiums is being cut from 18% to 0%. It's completely gone. That's incredible. And for farmers, critical items like tractor parts are getting their rates slashed down to just 5%, which should provide some serious cost relief. The cuts also hit education and big-ticket items. School supplies like exercise books and pencils, now completely GST-free. And hey, if you're thinking about buying a new car or a motorcycle, the tax rate is dropping a full 10 percentage points, from 28% down to 18%. Same goes for appliances like TVs and air conditioners. It's a pretty clear signal to get people spending. All right, let's shift gears now. Time for Section 3, corporate headlines. Let's zoom in on some of the individual companies that were making moves today. First up, Swiggy. If you've ordered from them recently, you might have noticed your bill getting a little bit higher. That's because they've hiked their platform fee again, this time to 15 rupees. And what's really wild is that this is the third price increase in just 3 weeks. It's pretty obvious what's going on here, right? They are making a very aggressive push for profitability, and you can bet an IPO is on the horizon. Speaking of IPO-bound companies, let's talk about Boat. This is a fantastic turnaround story. Just last year, they were in the red, posting a pretty significant loss. But now, they've completely flipped the script and are back in the black with a net profit of over 60 crore rupees. That is a massive swing. So, how'd they pull it off? Well, when you pop the hood, it's a bit of a mixed bag. Their core business, the audio products, is still growing strong. No surprise there. But their wearables division is actually struggling a bit. Revenue's down for the second year in a row. The real secret sauce, the big surprise here, is their international sales. They've just exploded, surging by 44%. That could be the key to a successful IPO. All right, we've mentioned IPOs a couple of times now, so let's just dive right into the big one. Our fourth section is a deep dive into what is probably one of the most watched upcoming listings, the Urban Company IPO. Yeah, the IPO market is definitely heating up, but Urban Company is the one that has everyone talking. We're looking at a pretty hefty 1,900 crore issue. So go ahead and mark your calendars. The offer opens on September 10th, runs through the 12th, and we expect it to list on the 17th. So where does Urban Company make its money? Well, no surprise, their core business, the home and beauty services here in India, makes up the biggest piece of the pie, about 77%. But what's really interesting for potential investors are the other slices. Their international operations are growing, and get this, their own in-house product brand, Native, already accounts for over 10% of the revenue. That's a really smart move. But with any hot IPO, you've got to look at the risks, right? And it's crucial to understand them here. First off, the company isn't profitable yet. It's still burning through cash. It's also walking this constant tightrope of trying to keep both customers and its service partners happy. And maybe most importantly, their biggest competitor isn't another app. It's the massive 99% unorganized offline market. Add to that the regulatory risk of gig workers being reclassified as employees, and you've got some serious things to consider. Okay, let's wrap things up by looking at the pipeline of future giants. It's time for our final section, Startup and Venture Watch, where we follow the money that's shaping tomorrow. And it's been a busy day on the funding front. We're seeing money flow into all sorts of interesting spaces. Quick commerce is still hot, with FirstClub raising a cool $23 million. But we're also seeing some serious capital going into online pharmacies, electric buses, solar energy, even water filtration. It just goes to show you that investor confidence is spread across a really diverse range of industries right now. But the biggest funding news of the day, honestly, is this whopper. 8 of India's top VC firms have teamed up to create something called the India Deep Tech Alliance, and they've pledged $1 billion to homegrown deep tech startups over the next decade. That is a massive vote of confidence in the future of technology being built right here in India. That wraps up today's episode of the Rahul Nair Finance Show, brought to you under our daily series, The Daily Deal Room, from startups to stock markets. If you like this explainer, don't forget to like, subscribe, and share with your friends, colleagues, or anyone who's into business and investing. We'll catch you tomorrow with more updates. Until then, stay curious, stay invested.